Joining me, Carl Riccadonna of Deutsche Bank on the American economy, and my Michael McKee joins us as well because we like having Michael McKee out here. Carl, how double dip has sort of gone away. We've got a consumer. What does the Deutsche Bank call for GDP to the end of the year?
Well, thank you for having me on the show. We're looking for about 2% growth in the current quarter and something in the vicinity of 2.5% growth in Q4. We certainly went through a scare at the beginning of the quarter and had to make some forecast downgrades. But it does look like there is some life in the aftermath of all of the market gyrations and events of the last couple of weeks.
I like the way you put that. There's life in it. Why are we so miserable, Michael McKee, if we're going to have 2.25% GDP growth?
Well, nobody is convinced that the economy has found its footing yet, and we've had a lot of negative sentiment indicators that have weighed on the markets in a time when everybody is sort of on vacation, volume is light, and then you get the gyrations in the stock markets. Probably the Fed didn't help by making a major change in its policy at the August 9th meeting, because then it's the old question of what do they know that we don't?
What did you learn, Carl, today in the Chicago index? Is that a sentiment index?
This was a very important economic data point we got this morning, with the Chicago PMI falling just a couple of points after devastating reports out of the New York and Philadelphia regions earlier in the month. We suspected that this series could hold in because auto sector output is snapping back from all of the Japanese supply disruptions in Q2, and I think that's helping that series. But it's not just an auto story. We also got factory orders today, and they tell us that civilian aircraft orders are booming. And also steel production in the Chicago, Indiana region is performing well on top of all of that. So it's not just an auto story, but certainly there still is life in the manufacturing sector. We just have to get through all of this uncertainty. We are noticing that there have been past instances, 2003 and also at the end of last year, where consumer sentiment was terrible, but consumers were still very active, and we suspect that that could be the case at present.
Now, we got some bad news from ADP on manufacturing jobs today. It was the one category in the ADP report that lost jobs. The Chicago number better. The Dallas, Richmond, Philadelphia manufacturing index is not so good. PMI breaks the tie tomorrow, the ISM index. What are you expecting for the national manufacturing picture?
Well, we increased our forecast by 2 points based on the PMI results.
So
clearly,
not negative?
Well, it will still be negative. It's going to fall from just below 51 on the ISM to a reading of 49. We were at 47, so we did up that forecast. 49 certainly is not a good reading. It points to contraction in the manufacturing sector. I don't think it will be a lengthy contraction. I think it could just be a short-term hiccup in the system. And the important thing to remember is that for the ISM to signal an outright recession, it would have to fall to a level of about 43 or 44. So we're clearly not in recessionary territory based on a number of metrics. The PMI, the ISM, jobless claims, retail sales, chain store sales. So there's a lot of signs out there that the economy still is muddling through.
Better already.
I'm feeling better already. My brain is freezing over, folks, from all these numbers. And when you see McKee and Riccadonna go like this, it shows you the ambivalence out there about the direction we're going. And I would suggest there's been a little lift up in the last couple of days. This is the number today. Down we go, doom and gloom, recovery. And here's this rollover and a somewhat of a sigh of relief that we weren't down here. But we're just parsing details. Let's go to this jobless claims chart, if we could here, as we look at the weekly claims number tomorrow. There it is, and we just can't get that number below 400,000. Carl, can public policy get claims under 400,000?
That's a very good question, and I don't think anything in the short term, aside from the government just flat out hiring workers to take them off of unemployment benefits, will get that number down. And certainly that's not a realistic political scenario in the near term. We're very close to that 400,000 level, and the fact that claims haven't deteriorated the way a lot of these other economic series, like the sentiment gauges, is an important indication that the economy is still chugging forward. Not at the pace we'd like to see, but at least it's in a forward gear, not a backwards gear.
Here's a research note from Deutsche Bank, folks. Let's bring it up here. It was a great acoustic trio, Livornia, Riccadonna, and Ryan I love their vocals. Shopping therapy, there have been distinct periods over the past decade when confidence faltered, as Michael McKee just mentioned, but spending held up as consumers grumbled but did not tighten their purse strings. Single best sentence I saw this morning in research. Michael McKee, that's exactly what you're talking about. The consumer just keeps on going.
Well, you go back to the 1990s, the famous quote from Alan Greenspan, we watch what they do, not what they say.
And that's where you get, Carl, to 2% GDP. What are we going to do on Friday with the jobs report?
Absolutely. Before we look at Friday's jobs report, the other key data point tomorrow is going to be unit motor vehicle sales, and that kind of gets lost in the shuffle a lot of times. But this is an important real-time gauge or even a leading indicator of consumer spending, and they are buying autos at a faster pace. The confidence report earlier in the week, which also deteriorated within the details, showed that consumers plan to buy autos and appliances and whatnot. So that vehicle sales number is going to be a key point tomorrow, and I think could be a significant positive contributor to GDP in the current quarter. Going ahead to Friday's payroll report, we've seen mixed messages in the data, as we already talked about. Jobless claims, in fact, are looking at they're at the best level since April of this year.
Well, let's
if we look at the monthly averages, so that tells us that payroll should be stronger. We're looking for something in the vicinity of about 50,000. Private sector hiring closer to about 75,000. The one caveat, and I think people are missing this point, the strike by the CWA will have a significant negative impact on Friday's numbers.
You're right in my script, Carl. That's great. Nice segue, or segue, whatever it is. CWA, this from the Communication Workers of America, not on Verizon. They call the DOJ action this morning simply wrong. Instead of acting to block this merger, our government should be looking to support companies that create and keep good jobs in the United States. A great day for op-eds. Some days there's like no op-eds, and today there was like a frenzy of op-eds. Let's get some of them in. Brad DeLong, bring it up here right now. Brad DeLong out at Berkeley. Always smart, whether you agree or disagree with him. 2 months of bad economic news, coupled with asset markets' severe revaluations of the future, mean that a policy that was appropriate 60 days ago is much too austere today. Carl Riccadonna, where's Deutsche Bank? Where's Peter Hooper on the need for stimulus?
Our view is that at this point in time, we think what could be best for the economy is just for everyone to sit back and let the natural forces of recovery take hold in the economy. The Fed tinkering with additional policy options, while I think is likely, and we will see some sort of operation twist at either the September Fed meeting or the November Fed meeting. At some point, the Fed has to just step back and say, we've pretty much done all we can, and it just needs time. Also, certainly on the fiscal front, there's not going to be a lot of fiscal stimulus coming down the pike. We may see in President Obama's address after Labor Day, which I believe will be Wednesday of next week before a joint session of Congress, he's going to have some programs in place to extend unemployment benefits and an infrastructure bank and some other factors. I think that cutting the Social Security contribution, which was reduced in December of last year, I think extending that for another year could be helpful, and I think the capital depreciation allowance helps. But beyond that, I don't see any meaningful fiscal stimulus passing from the president's desk through both branches of Congress.
That's a nice summary, Michael McKee, as we go to the president on Wednesday. How critical is the jobs report to the president's tone, his temperament Wednesday?
Oh, it's obviously very critical. A terrible job report. If we get, as some are suggesting, a negative print, then it all becomes on his shoulders.
Okay, negative 20,000, but you add 45,000 to that?
Because of the Verizon strike, this is going to be an interesting report, because take the headline, add 40 to 45,000 jobs on top of it. We had to do that, remember, with the snowstorms. But even if we get a good number, it's still important because the unemployment rate isn't going to come down, if at all, this Friday. And he's going to, that's the shorthand to the American people for what the labor situation is.
Another op-ed here, David Malpass. There's a zillion of them today. Paul Krugman, particularly smart on Hicks. Here's David Malpass. Mr. Bernanke should directly confront the fear index embedded in high gold prices. Gold at more than $1,800 per ounce is a loud public statement of no confidence in our central bank. Carl, what do Michael Lewis and the commodities team at Deutsche Bank say about gold? Should Chairman Bernanke care about the price of gold?
I think that the price of gold falls very far down the list of central bank concerns. They need to be more concerned about employment and inflation, their dual mandates, and the smooth functioning of financial markets. Commodity prices can be distorted by lots of factors. Certainly the case can be made that it's a lack of credibility for the Federal Reserve. I don't know that I believe that that's the case. It can also be industrial and consumer demand and also sentiment driving it. So to some degree, I suppose gold matters, but I agree that the Fed is acting appropriately and putting that far down on its list.
Michael, last word to you. You have spent so many days, time, weeks, months in Washington. What matters to Washington of all this economic mumbo-jumbo we talk about every day?
Right now, only the unemployment rate.
The unemployment
rate matters more than anything else because that's what people are going to vote on. I mean, in general sense, GDP, the economy has to be seen as growing, but unless you bring down the unemployment rate and we get rid of some of the vitriol in Washington, you're going to have a lot of angry voters next fall, and it could redound on both parties.
That's why you're smoother than me. He's got that vitriol going and that segue as well. Thanks to Michael McKee and Carl Riccadonna for a discussion here on the American economy as we get you ready for the jobs report on Friday.